Good morning, business owners. Mike Bosma, your business savvy CPA, coming to you from Studio B. That's Studio Bosma Business Center. Each and every Saturday, 60 minutes of action-packed business adventure. Really excited about today's show. Louie Navellier from Navellier and Associates going to talk about building a brand, building a newsletter list, selling it off, and maybe doing a little tango with the government. We'll see where this thing goes. Now, I've been a fan of Louie for many, many years. He may or may not remember this. I actually interviewed with him back in 1995. It was a minute ago. So, Louie, welcome to Bosma on Business.
Great to be here.
So, Louie, tell us a little bit about your background. How'd you get into this financial advisory game and became really one of the smartest guys recognized on Wall Street?
Well, I was lucky. In the late 70s, I had access to mainframe computers and at Wells Fargo, and this is, pre-PC. And we were trying to build tracking portfolios because they passed a law called ERISA, and the way the lawyers interpreted ERISA is you had to mirror the S&P to cover your butt. So in other words, if you just match the S&P, you wouldn't get you wouldn't have any legal responsibility. So this is before indexing. I'm that old. And I developed a tracking portfolio of 332 stocks. You had to add the beta to 1 and have all the industries and sectors. Anyway, I was a failure because I kept beating the market. So I learned I was lied to. So I set out to document that there are anomalies and inefficiencies in the market. And I'm from Berkeley, California. And so in Berkeley, they teach you that how dare you try to out-earn your neighbor? You're going to create social unrest. Okay? So this thing that we Americans are all supposed to succeed and, strive for good things is anti-Berkeley. Okay. So I actually went to work for the Federal Home Loan Bank as a banking guy, which was interesting, a banking analyst, because the yield curve was inverted and the savings loans and banks were all blowing up. But I was very good at accounting, and I could take two losing banks, merge them together. And when I was done with them, they made money. I couldn't fix their cash flow. Right. So you never see a financial stock in my portfolio, a banking stock. And but I set out to document that you could beat the market, and I was fortunate that Mark Holbert rated me, and so I got the highest rating for 20 plus years. And then since the late since '87. We've been publishing everything we do free in the public domain. It's called Stock Grader, and it's on our investment newsletter sites. It's on our management company sites, and we give all our research away free because we want everybody to know that you can beat the market if you buy predominantly our A and B rated stocks. And one thing we're very proud of is that our fundamental models are now beating our original quant models. Oh, so wow. It's been refined over time, and we test it at the end of each quarterly earnings season because that's when we get our fresh data. And we're very, very proud of our stock grader and our fundamental models, and we're having a ball.
Now we're talking. So kind of back when newsletters were in paper form, you started to grow a list. Sounds like as you did the circuit, or I would call the circuit, on various TV shows, and say, hey, sign up for the newsletter. Mm-hmm. What was the genesis? I understand the content. But growing a list is actually, there's a lot of nuance and magic to it. So what was the secret sauce to growing your list?
Well, in the old days, we'd buy a list from a guy named Bill Bonner, and we would do these mailings and see if anybody wanted to subscribe. And, that's how we built it. And what happened is because I was managing money, my newsletters were filed with the SEC. And then in 1985, the Supreme Court ruled that the SEC didn't have jurisdiction over newsletters. So eventually I teamed up with publishing companies. First it was Phillips Publishing, and now it's called MarketWise. It's a public company. And Bill Bonner, ironically, is trying to buy it.
Small world.
It was actually a spinoff of Bonner, okay? But his son made an offer for it, but Bill's behind the scenes. So we've all come full circle, so we all work for this guy, Bill Bonner.
Okay. So you grow the newsletter, and then ultimately, how do you get paid, right? In your business model, how do you make a buck or two to cover the overhead? I know your office is right down the street. It's a nice office. It's not free.
Yeah. So, let me back up. So we have these meetings with the SEC every 5 years or so. And about 25 years ago, they made it very clear that I should not manage money because I'm a newsletter guy. And I said, don't you know about that Supreme Court decision? They were ignoring it. So this is
Right.
one of the problems the Supreme Court have. They don't have enforcement. And they don't give you any rules, any regs. They just says you can't manage money. So I became a cheerleader for my other managers. I basically had an airplane. I ran around, raised a bunch of money for them. And then over time, I said, this thing smells, and other SEC audits, they didn't bring it up. So I basically took over the management again. But I don't pay myself because that original SEC examiner. And then I sold the broker dealer arm mainly because I was getting denied best execution through certain channels. Okay.
Really?
Yeah, no, that was the problem.
Okay.
And I can start rallying off the firms, but they're big names. Some firms would take it from us and do the execution themselves, and we'd watch them blow the stocks up. I know one firm went from us model to us managing it back to model, and they give you bad trading pipes. So I'll tell you about one company, and I'm not going to name them. They would only let us trade at 10:30 and 1:30 Eastern, and market only. You could not work an order. And so we would have financial advisors call us, yelling at us, why is my performance not as good as yours? And I says, because you're going through this firm. And you could tell by the ticker, because you might start buying the stock at 20 and a quarter, but when you're done, it's 21.3877 or something.
And
so
those little those matter when it comes to return, right?
Correct. And then at the wirehouses, you have to pay for access. They pay you only 15 basis points. You got to pay, this is a decade ago, you got to pay $750,000 a year just to walk in the door. So one of them, I remember that we had 358 million. We were up 38% that year. I gave them the money back. But they were also driving the stocks higher. And It was an emerging market product. It was probably too much money for emerging markets. So I just got I'm not anti a financial advisor, but I don't like how the firms make money on spreads. Right. And I still remember the call over 15 years ago, Louie, you better start doing ETFs. And I said, I'm a stock guy. Oh, yeah, I want you to do ETFs. So we start our own ETF. I ring the bell on the stock exchange, get 80 million. Then I find out the spread is 3.54. Cantor and Jeffries, the specialist, and I got so upset that with the spreads on ETFs, I gave it back. I said, I don't want to deal with this. So I don't get compensated on spreads. I have friends that are in the ETF business, and they make a lot more money on spreads than they do in management fees.
Okay.
And
when we talk about spread,
yeah.
Is that the spread between what they want to buy it for versus what you actually buy it for?
Yeah, people can see it. They just go to Morningstar.com. And the problem is we have these flash crashes on Wall Street, or we have these mean reversion things. We had one on August 22nd. We had one last Friday, on November 7th. And you can go to Morningstar and you can get fleeced, 8-9% intraday. Okay. The worst one was in August of 2015, where the stocks wouldn't open, but the ETFs opened, and most of them gapped down over 35% that morning and stayed there for, a few hours. And at the end of the day, they were unchanged. So like you can look at DVY, it's the iShares dividend ETF. It got fleeced 34.95% in a day. So Betterment, who was a robo-advisor at the time, stopped trading, got widely criticized by the media, but they did the right thing because the spreads widened. We've written a lot of white papers on this, and we were managing ETF assets for financial advisors, and on the theory that we could execute it better than they could. But the spreads are tight in the morning. They're tight at the close. In the middle of the day, you can drive a truck through them. And obviously, if you start leveraging the ETFs, Nvidia 1, Nvidia 2, whatever, that spread's going to get wider and wider. So Wall Street works on a spread model, not a management model.
Okay. So, and that's where all the stuff, we call it inside baseball, right? This is or how ketchup or sausage is made, right? Where people are like, well, I just want to buy it. And they don't know that there's these spreads behind the scenes. They just know, when it shows up in their portfolio, what it cost them. But
I think the easiest way to explain it is my son-in-law works at Merrill Lynch. My oldest daughter works at Morgan Stanley, and they don't sell stocks. And the reason is they can't make money. So they sell private credit. It's a 2% fee to get in. They'll can make 1.5% a year. Everybody's happy because they're getting 11% on private credit. Now they're leveraging these loans. Okay.
Mhm.
And this is a $3 trillion a year industry. Obviously, we're learning about some problems, Tricolor, First Brands. BlackRock has some guys in Utah that are going to cause them to lose at least $500 million. BlackRock
Ouch.
was late to the game.
Right.
But none of this is filtering down to the investors yet.
Right.
But, what caused private credit was Dodd-Frank. Dodd-Frank basically prohibited lending to anyone unless they were perfect. So if your credit score is not above 800, you're going to private credit. So
Right.
they kick you out, they mark up the loans, and that's where it all starts. And my son, finally he's working. He spent too much time at Stanford, but after multiple degrees, multiple masters, he's back in the private credit business. He was Bain, now he's a private equity shop in Walnut Creek in Greenwich. But, the rates they borrow at to do these deals is pretty bad. And, my son's fortunate he does private credit he does private equity on healthcare. And by the way, California just banned all private equity deals on healthcare, even though he's based in California. And you may know in Reno, Renown's taking over. I mean, Renown's
Right.
being taken over by Kaiser. Lots of layoffs,
Okay.
lots of turmoil.
Right.
People are not too happy.
Yeah. Well, and that's where, because you're talking about, that, when you other people's money, right? You're investing other people's money. You're guiding them, trying to say, this is how you game the system, how you can make a buck or two again beyond the S&P. And then, through your newsletter, a way to monetize it, if you can charge for it.
Yeah, we're bigger than the Motley Fool. So the newsletter
Right.
business is over $100 million a year business. And so I don't make $100 million a year, but I do get some money off of that. And there are royalties, and that's how I'm mostly known. And you can't use a newsletter to sell management. You have to have extra disclosures. But most people know me as a newsletter guy.
Gotcha. Well, let's see this. We come back at Louie Navellier from Navellier and Associates. Talk about how technology has changed the game for investing and advising. When we come back, it's Bosma on Business.
I was born with a congenital heart defect and almost died. But thanks to research funded by the American Heart Association, I had heart surgery that saved my life. Learn more at helpheart.org.
Welcome back to Bosma on Business. Your host, Mike Bosma. On TV, on the screen, Louie Navellier from Navellier and Associates, just talking about his background and, again, probably the smartest guy I've ever even heard of, much less known, in everything, how the markets work, how efficient or not they are, and how people make money in the margins that may or may not be the investor, right? So it's these big investment houses, they're not put together based on anything other than their ability to make a buck or two. I've always, it sounds like Louie, were aligned in that I've always bristled at the model, right, where in essence, let's say you pick a number, 7%, over time, and then your financial advisor's taking 1% of that. Well, you look at it as a percent of your return, and what your net yield is after you're done. You're like, it's really hard to keep up with the model after fees. So, and I'm just curious, Louie, as this whole game has evolved, going from, you got started before there were computers on the mainframe, and then as it's morphed, there's a lot of people out there trying to build models, various models, to try and edge the market, time the market. And, how is technology changing the landscape of this entire business?
Well, there's a lot of data on Substack and things like that. There are a lot of people who like to trade, but I can tell you literally what happened. During COVID, the publishing business exploded because there are a lot of people sitting at home, and the newsletter industry says, oh, you don't have to go back to work. We'll teach you how to trade and you make a living. And all that ended up blowing up. I'm in Florida right now. I go between Florida and Reno. And was a firm not too far south of me who was mostly crypto trading, and making 1,000% in crypto wasn't enough. You had to make 10,000% on a token. Okay. So that all got shut down, and that guy reappeared. And then there was another very well-known advisor who was doing a great job, in my opinion. And he had some tiff with his marketing guy, and they fired him. And hey, now he's back at our publishing empire in another division. But it was just a waste of time to not. Because he disappeared for a few months. So the publishing world is controlled by copywriters. Okay. And what copywriters are, they're visionaries. Okay. And I tease them all the time because they go in the future, see the future, and come back. Okay. And I always ask them how the time travel was. And, are you okay? You're sure the machine put you back together correctly? But our copywriters are hot right now because they did a promotions on quantum computing stocks, and those are some of the hottest stocks on the market. And fortunately, Navellier is behind, the quantum computing contests and things like that. None of them make money yet, but we've written a lot of reports on them, and they have all gone nuts. They've other copywriters have done small modular reactors, those kind of things. Not mine, but other companies.
Okay.
And they don't like to talk about things that you can buy. Okay, they like to talk about the future. There are a lot of interesting characters in the newsletter business. I happen to be part of a shop that where myself, Luke Langone, Eric Fry are doing exceptionally well. Eric Fry's number one in tip ranks. I know I'm top 1% in tip ranks, and Luke's a Caltech grad is really good at technology. He'll buy them before me, and he'll have some bigger gains, but he'll strike out a little more. Also, the batting average is very, very important. But basically, if you turn on CNBC, you notice they forgot to talk about stocks. And and that's the Wall Street problem. McKinsey took over Morgan Stanley. They hire this guy, Mike Baker, who tells you to get out of stocks for the last 6 years. Bearish guy, wrong on everything, but he achieved his objective. He moved the money out of stocks into private credit and private equity, where the firms can make more money. So,
1 second, Louie. So,
yeah,
the market's done pretty well over the last 6 years, right?
Yeah, without any investors, which is pretty good.
Which is pretty good.
If you look at foreign flows of fund into America, it's unbelievable because, America is an oasis compared to the rest of the world. The world is dying, because the demographics. I was talking to some European investors, and they're just aghast that Navellier is worth more than the entire British, French, German, or Italian stock exchange. In fact, it's worth more than the French, British, and Italian stock markets combined. Okay. Right. And it's 14% of our GDP.
Right. Right. And it's just getting started, right? I mean, the whole industry is just getting started, right?
Correct. So the other reason I wanted to sell my business and get away from what we call the gatekeepers and the people who tell us how to manage money is that, Navellier is, 18% of my portfolios. I can't sell it. This is my second time in it. At first we made 1,000%. Then we got back in, and now we're up 4,800 or something. I don't want to sell it. My clients don't want me to sell it. No one wants to pay the capital gains. Okay. But I can't do that in a normal portfolio. Okay. Right. Because the gatekeepers say, no, you have to trim. So now I'm the average age of most of my clients. Okay. And, I'm there with them. I'm one of the biggest investors at the firm. To a billionaire gave me some money, but, and I have to be last in, last out, or commingle with clients. We're just a family office now, $1 billion plus family office. And we're just trying to take care of people. But the rules the pension consultants put on you, the gatekeepers at a lot of the firms, I don't play by those rules now. And so I do what the hell I want. And now it's like a dog breaking the leash, and we're having a ball. It's funny. I was in Chicago, and I used to manage money for the city of Chicago for 2 decades, talking to one of the old treasurers. And I says, I just can't, what I'm doing now, I couldn't do for you because you put all these restrictions on us. Right. You'd always lend our stocks out through Northern Trust. And every time I went to sell something, I couldn't sell it because Northern Trust, they lent it out. So, Wall Street's an interesting place. One of my favorite things that happened to me is back in, I don't know, it was over a decade ago, but I had a couple billion in a fund, and, we were top 1%, 5-star, and the president of the fund family wants to come out and have a chat with us. I assumed we were going to have a marketing push because we had such good numbers. And he comes out, and in fact, I flew with him from the East Coast to Reno and dropped him off at the hotel. Anyway, what happened is when we have our meeting in the morning, he fires us. Because I says, why? Because we got to do ESG now. So the Rockefeller family, which doesn't buy fossil fuels because they're ashamed of how their family got rich, is a big ESG manager, but the performance wasn't so they needed my record to sell. Okay. Okay. So the only problem is I pulled like $800 million out of this $2 billion fund, and this tax time bomb goes off, and everybody gets upset. And then Morgan Stanley promised a bunch of money, never showed up. Okay. And that guy's now not in the mutual fund business. He was Pioneer and then another fund family I used to work with. And so his career's over. But Wall Street's always trying to create some weird way to manage money. And ESG was interesting because there was European ESG, there was East Coast ESG, which was union, and there was West Coast ESG, which is carbon. Okay.
Okay.
And what are the, yes, I've put some of these things through my stocks. I remember once there was a firm in Oakland, very, very green firm. And, I recommend 80 plus stocks. And I found 2 I could buy under them.
Well, let's do this. Louie, this is fascinating. I want to talk about some of the tax traps, give you a couple tips for people, exiting NVIDIA without giving it all to the government. Let's talk about that when we come back. We call it Bosma on Business.
In life, things aren't scripted.
If you're an athlete, we need people like you and translate those skills to officiating.
You can get a lot out of it.
It happens in every town, in every game.
We never have a perfect game, but the rewards always outweigh the negativities.
Welcome back to Bosma on Business. Your host, Mike Bosma. Sitting with having just a chat with Louie Navellier, Navellier and Associates. Been a fan of Louie's for a long time. Louie has quite a followship. If you follow him, one of the smartest guys in how the markets work, and somebody you want to listen to. It is interesting, though, Louie, to hear about this. You called it the tax time bomb, right? All of a sudden, hey, we need to exit a position, whether or not you wanted to or not, and then because you've done so well, you have this tax problem. I'm curious, or like when you sold the firm back in 2013, I have my own opinion on how poorly, I probably have the same opinion on the CPA profession as you have on the broker dealer profession. They're really there to make a buck, not so much to help people. So, what have you seen some interesting tax strategies people are trying to do to not pay tax on all that gain?
Not really. They can gift it to the kids, transfer the basis, but it depends how much you like your kids. And no, most people just have to pay the long-term gain. But our average gain right now is about 135% on average.
Mm-hmm.
So we're just sitting on this tax time bomb. I think we're fortunate to have a lot of the data center related things. So we have NVIDIA, we have AI appliers like AppLovin, Palantir, and then everybody building out the data centers.
Right.
That's MCore, Vertiv, VRT. We're still up 700% Supermicro, even though they're a little inconsistent, but they provide a great guidance next quarter. We'll see. I don't trust the Supermicro guy anymore. But I don't want to sell the stock because I got 700%, and they're one of NVIDIA's biggest customers. We got Comfort Systems air conditioning. We got Quanta Services. That's PWR. MCore, EME, Argon, AGX, Power Solutions, PSIX, UI, which is all the cabling and everything in the data centers. We're blessed in Reno to have fast internet because we have data centers.
Right.
But as the internet gets faster and faster, you got to change all your switches and all your gear, and of course you're supposed to hook up everything via fiber. But the order backlogs from the second and third quarter were up 20%. And year over year, they're up 50 to 65. So this is most of our GDP growth. And it's going to be interesting. We're going to hit 5% GDP growth next year because of all this. And then we get all the other onshoring that's going on.
Right. Well, because it's interesting. There's I'm talking to a lot of people now. They come in for consults, and they have this tax problem. And I'll just give you an example, right? So it sounds. Had a couple in California. Guy's 85 years old. Bless his heart. He's just day trading like a fiend, right? And he figured out his little recipe, and he turned about $500,000 into $20 million. And it's awesome, right? And I'm like, well, and he said, well, we've already liquidated $6 million, so we got $6 million of gain, and then we have another 12 that's coming of gain. And we really want to get out of these positions, but basically half of it's short-term capital gain. And in California, when you're at 37% tax rate plus 13.3% Fed, you're giving half of it away. I worked all this to create this wealth, and the government's going to take half of it.
And the 3.8% Obamacare tax about
and the 3.8% Obamacare tax, absolutely, net investment income tax. So that's where I I guess, started this move of moving wealth to, either private foundations, or there's a thing called a charitable LLC that, you basically give it, if you're going to, if you look at your overall strategy and, if you're going to give it to your family, think about the private foundation. There's also CRETs and CRATs and all kinds of fun stuff to be able to do. But the other part of it is, this charitable LLC strategy where you give a chunk of that to charity, and then that percentage of the gain you don't pay tax on. The IRS is currently auditing and all right now. We're defending about 100 of those audits, not for my clients, but for other CPAs clients. We're the subject matter experts on it. And the good news for people, I think, is the IRS is auditing 2021 pretty heavily right now. And we think, we've got 6 of these going to tax court. We feel, again, you never know the hazards of litigations, but I think that this is going to be upheld because there's really no reason to deny somebody their deduction. And so if you look at like my California client that's going to give half of, their $20 million estate away in taxes, versus, hey, if you do this, by the time you get to the other side of it, because you have to transfer this, do the gift before you sell, and they want to get out of it because it's so volatile, right? It's like, and so, they want to just like, hey, they'll take market rates of return, hallelujah. They made their fortune. Now they just want it stable, right? They don't want to get off the roller coaster.
Well, I wish you luck with that. I try not to mess with the IRS. I've had to be in federal court with them, and I always do what they want me to do. But I would tell you what I told the SEC. I don't pay myself because some SEC guy said don't pay yourself. And then what happened when Obama was president? He said all you guys have S corps or LLCs have to pay Social Security taxes and Medicare taxes. I'm sorry, Medicare taxes. So I was paying myself. So the SEC would find out I was paying Medicare taxes, and they said, "You said you wouldn't pay yourself," but I said Obama's the president. Do you know what I mean?
What am I supposed to do?
And we've gone all the way to federal court, and we've, they're not a dime going to me; it's just going to the government. Okay. And we've won all those, but that's what the IRS wants us to do. So the SEC is now fighting with the IRS. It's ironic, and of course now we're up to $1.2 million a year in Medicare taxes because Biden hired all those auditors, and that's what they did. They hit small businesses and jacked up the Medicare tax. Had Biden been elected, the Medicare tax, which is 3.9, would have gone to 5 and would have been unlimited. So it would have basically been a hidden income tax. Right. And you can see how upset they are at the government. That's what the shutdown was over, because they want to have more for that. I'll tell you another funny story. I was on Florida Blue, which is Blue Cross in Florida, and I had a bike accident. I've had a few of them, but anyway, I didn't know my shoulder was out. So I'm at my Reno office and my arm collapses. And sure enough, we go to ROC, Reno Orthopedic, and they get my shoulder in, but they have to put me out to do it because it had been out for 8 days. And anyway, so, Blue Cross wouldn't pay the bill. Okay. And because I had done in Reno and I had Florida insurance. Anyway, so in Florida, they use these off-duty sheriffs to collect the medical bills. And so this sheriff comes up my driveway in his police cruiser, and he's not a sheriff; he's a bill collector. And I have a big koi pond, and I'm cleaning the koi pond with a pull net, a big net, and he thinks the net's a threat to him. The only time I've had a gun drawn on me is to collect my Obamacare bills. Okay. Oh my God. And so he did get $12,000 out of me that day, and then 2 weeks later he came back to get the anesthesia bill. And but the and at least the guy that drew a gun on me knew what he was doing. But so that's I'm Medicare now, so I don't worry about it.
Yeah, but I guess that's the issue, right? It's like, and I've seen it firsthand. I've talked to a lot of the 80,000 auditors that Biden hired. Yeah. I've seen them go after people. I mean, just a tremendous abuse of discretion, abuse of power, where literally I've had an IRS agent duct tape a summons to a taxpayer's residence saying you must appear on this day at this time, right? You're being audited. Well, guess what? You get an audit, but yeah. So I remember I went to his, and he was like, well, it has to be in Detroit, Michigan. And I called up the auditor. I said, no, I'm in Reno. My client's in Detroit, and the other half of the time is in Florida, by the way. So, and he's like, oh, and appealed up to his supervisor. Oh, we do it this way in Michigan, and I'm just like the hoops they're making this guy jump through. So finally, we had to shut it all down, right? And that's where I think our society is. As long as you're doing the right thing, you're not going to get sideways with the government. And I just don't believe it's true.
Well, what's interesting is, I don't mind states. It's pretty easy to defeat state things. Like New York leaned me because my daughter went to Columbia grad school. The apartment was in my name because she had no credit, and then New York says, "Oh, you live in New York?" No, I don't.
Right.
I signed my daughter's lease, so that's only like 13.7 million. Anyway, but going back to, but they can't collect, and they leave me in Nevada, and I'm not a New York resident. Leave me alone. But there's no hearings. There's no due process. But the other thing that was interesting about Nevada, I had to move from Nevada because of taxes. What happened is I had an airplane because I used to give speeches for a living.
Yep.
And Washoe County wanted $1 million personal property taxes. I sold the plane for barely $2 million. And I had a hangar in Reno. It's like $6,000 a month. And they said, well, you're here. I says, no, I'm not. It's a Delaware plane living in Boca Raton. So leave me alone. But I did my maintenance in Reno. Okay.
Right.
So I ended up selling for $14,000 and moved the maintenance into Idaho. And the lieutenant governor of Nevada was working for me at the time because lieutenant governor of Nevada is a part-time job. So I don't know if that's why they went after me or what. But the other thing that's interesting is, because I gave speeches for a living, I'd do a town a day. So I'd have breakfast meetings, lunch meetings, evening seminars, get on the plane, fly with a freight, go to another town. This is how we raise money. And in Reno, I needed the plane because the commercial service is poor. And they said, Mr. Navellier, we had an IRS audit. And we said, Mr. Navellier, you can't land where you have a home. Like, what do you mean? You can't land where you have a home. Like, why? And what they did is some guy in Kansas City was flying to Jackson Hole every weekend, and they nailed that guy in court, and they used that court case to get me. And so I sold the planes and moved to Florida. And that's why I live in Florida, because between the personal property tax and that, it didn't make sense. And then now I'm on the internet, so I don't have to travel like I used to, because the internet's a lot more efficient than running around the country on an airplane.
Nope, I get it. We're just with Louie Navellier talking about when government gets sideways with you. So when we come back, let's talk about how to defend yourself when you have a guy drawing down on you at your koi pond, and what your rights are. When we come back, it's Bosma on Business.
What if you had some money waiting for you at the IRS? Money you could use to fix up the house, tune up the car, get a little something for the family, or save for a rainy day. If you worked and didn't make much money last year, find out about the Earned Income Tax Credit at irs.gov. It makes life a little easier.
Welcome back to Bosma on Business. Your host, Mike Bosma, with Louie Navellier, basically the genius behind Navellier and Associates. One of the things, Louie, when you were talking about your, IRS and then Nevada problems, Nevada is an interesting anomaly in state taxation. I know exactly what the problem was with your plane. I actually took that same issue to the Washoe County assessor, and tried it there, and then ultimately to the State Board of Equalization, and won there, that say this is how we're going to tax planes. That and kind of created a whole new methodology for it. That if you were unaware, they would just go send you a bill for 100%. Like you have to pay tax in the other jurisdictions. Taught the assessor, sat down with various of this Washoe County assessors, talking to them how the constitutional restrictions on taxation. It's an interesting issue, right? Because and I'd say the same is true with the Internal Revenue Service. They have their own opinions. In fact, with this charitable giving strategy, I had one of my employees defending this audit, another audit out of Shreveport, Louisiana, and the agent was just incensed by, oh, well, you can't do this, basically you're a bunch of crooks. He freaked out over it. He quit, right? And so, we're navigating this audit, and they had seen it before, but I just said, this is why it works. Fine, right? Kind of same thing in the state of Nevada. When I went to the Department of Taxation and said, Mr. Executive Director, the way that, every casino is doing sales tax on complimentary meals, employee meals is wrong. So we're going to file refund claims, about $200 million in refund claims. And I remember he slammed his fist on the desk saying, this is BS, this is wrong. I'm like, and Nevada Supreme Court said Mike Bosma was right. So it's just, but you're not.
Good for you. Good for you.
It's just the hazards of litigation took a long time. It took almost a decade, right? But it was just, but I guess that's my passion, because I see how terribly, and I would say they just have an opinion and they execute on that. And then you, unfortunately, are left to suffer it. And if they're right, they're right. Their rules are the rules. But oftentimes we know the rules way better than they do. They're like, I didn't know, right?
Yeah.
Because
the car tags are a big issue in Nevada too. So
Right.
I have Florida tags. I'm a Florida resident, but I just did put my snow tires on my cars, and I do get pulled over every other year. Like, why does it say Palm Beach County and you have snow tires? And I said, I'm a Florida resident. I'm trying to be safe. Okay.
Right.
That's how you don't crash when it snows. And, you see more Arizona tags, you see more Oregon tags, you see more Montana tags because of this personal property tax we have in Nevada. And, obviously we don't have a state income tax, so they're obviously trying to get it somewhere else.
Every other which way. So Louie, I did have a question for you though. So so when your wealthy clients have tax problems, how do you help them with those?
Well, they do have tax problems, but so we get a lot of accounts with these huge embedded capital gains, and then we rank the stocks in order of attractiveness, literally top 1% to bottom 1%. And then we say, okay, how much can I sell? What limit can I work with? Okay. And we work with that limit. Now, our attitude is a lot of the embedded capital gains are in monopolies. Amazon, Meta, Microsoft, Apple, of course, and Navellier et al. Netflix would be there. And you have staying power when it's a monopoly. Monopolies don't last forever. Okay. But most of the Magnificent Seven, and I would say in the top 10% of stocks, are effectively monopolies. And those monopolies run to the government for protection, whether it's Biden or Trump, and they suck up to them. I mean, guess who's paying for Trump's ballroom? You know what I mean? Yeah. The other thing that's interesting is that this Lita Khan, she's behind the Mandani, the New York mayor. She was the FTC commissioner. She won the case to break Google up. Okay. Now, breaking up Google is like a dog catching a car. Okay. Right. Like, how do we do this? Okay. And it finally got to the judge to enforce the judgment. And he said, no, this doesn't apply anymore with AI, and disallowed her victory. And so Google's all happy. I guess they have to do more disclosure, and, but the way America is so different, Europe works on open source software. And when their airlines crashed over there because the Microsoft Azure Cloud went down with a CrowdStrike upgrade, Microsoft didn't blame CrowdStrike. They blamed the EU for being open source. And they're trying increasingly, depending who we elect, that was to make all the software open source so they can spy on us better. See, right now, they have to subpoena Apple or Google to get our cloud records, our email and everything. Right. Okay. And, but if they get their way eventually, they'll just have it without a subpoena. And of course, there's 8 senators that are upset because somebody went to the trouble to get a subpoena, and they're trying to figure that out.
Right.
It's very interesting. The Telegraph guy is fascinating. He had software with Russia. Russia bought him out because they didn't want all the war reporting. Anyway, it's a long story. So then he goes to Berlin, London, San Francisco, and then Dubai to figure out where he should operate. And he ended up in Dubai. And the reason he didn't stay in San Francisco is the FBI visited him, said, no, we have to have a back door. And then he got mugged, and he did fight the guy back successfully. And then eventually the French got him because he was vacationing in France, and they grabbed him to get the back door to Telegraph. So Telegraph does have a back door now through the French intelligence agency. So we live in an interesting world. And so I advise all my clients is to defer your gains as long as you can. They will let me sell a certain amount each year. And but yeah, I have clients that have over 40 million in long-term gains that are being deferred, and we are very careful with them.
Nope, I get it. So, Louie, as our hour comes to a close, I appreciate you taking the time sharing your genius with us. If there's ever anything newsworthy, let's reach out. We'd love to have you back. And if somebody wanted to sign up for your newsletter, how would they do that?
Go to navelliergrowth.com. That's Investor Place Media, and then sign up for a free letter called Market 360. And then on Navellier and Associates, Navellier.com, our management company, we have a free service called Market Mail. So I would sign up for our free services. Our stock grader and everything are free in the public domain. Start getting the stuff. Also, we have a YouTube program called Market Buzz that my daughter does. And so she's wildly successful with this. So we're very proud of her.
No, that's awesome. Same if if you're looking to subscribe for the benefit of our listeners, of our watchers, always go to our YouTube channel, Bosma on Business. Like and subscribe as well. Louie, thank you so much for coming alongside. Next week, Elizabeth Flesher, bankruptcy attorney, is going to talk about the things that you need to do today before you ever even think of caring about bankruptcy to be able to cover your assets, to protect your assets. Once you're in the thick of it, it's too late. So she's going to share some tips and tricks on things you need to do today so that in the unfortunate event that somebody's coming after you, you're in the crosshairs, there's nothing to get. Till next week, my brothers, my sisters, keep that business engine humming. It's Bosma on Business.